Good morning everyone, and welcome to the PivotBoss pre-market video for Monday, July 23rd, 2018. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You can see right here, just as we back out from this view here, this is kind of a year to date so far. You have the beginning of the year here, major high, impulse sell-off, major low, and since then we have stayed within the middle portion of this range basically the entire time. And if you go back to the first week here where we sold off into the first week of February, that's exactly what we mentioned. That was such a significant move. It was designed to keep prices within this range. Eventually we will see expansion out of this range one way or another, likely to the upside. We continue to see kind of a channel trend up type of situation here as we continue to push higher. Again, we are sitting here near some price zones that have not really seen much love here lately. Every time we get up to this zone, we've definitely seen selling pressure recently. This is the first time where we're kind of holding above this zone for at least a week plus. And again, if there's any failure to hold above this area, that could rotate prices right back to 2,700. So if we zoom in a little bit, you'll see again, this is the area we're talking about. That's 2791.75. That's basically the FOMC key level from June 13th, and we're holding up above that zone, a little box above it. We have come back into the trigger zone here, so bulls are attempting to buy to push this higher, but again, we haven't seen much acceptance above 2,800 throughout the first part of the year. So if there's any failure to hold 2,800 and especially the 2790, that could rotate prices right back down toward 2690 to 2710, recent support. So again, this is going to be a zone to watch here early in the week. Now if we take a look here at the NQ, the NQ looks fairly similar in that it's holding up near these highs. We do have Google earnings after the bell today, so that's going to be something to keep an eye on for tech. All eyes on Google here to see how they do. For the most part, this movement has been trending up. We are up above the highs just a little bit here, so we might be near a cycle high, which means we could see a little bit of a pullback, but that could lead to another round of strength. Overall, this market has been stronger than normal, or stronger than the average market here. Tech has been leading still, and so far so good. So we got to continue to watch this 72.75. That is the June 13th FOMC key level. Any failure to hold that level could rotate prices back toward 7K, but again, given the overall trajectory of this market, any pullback continues to be a buying opportunity until proven otherwise. So right now, looking to see how Google plays out later on this afternoon. That could give us a tip-off as to which way prices are headed. But again, wouldn't surprise me if we see a little bit of a pullback followed by another round of strength. Let's take a look now at crude oil. Now crude, very interesting market. This one has been trending up, very bullish on a long-term perspective. For the most part, you know, this pullback right here has been met with some compression, and it looks like a pretty significant rounded bottom. We are coming in to test the 69.34s from below. That's basically the midpoint of the key range. But I want to drop this down to a hourly bar chart here. If you look at the hourly bars, you can do this in any time frame for the most part, but look at that rounded bottom right here. Significant compression. That type of pattern has the potential to see explosive movement back toward recent highs. The recent high would be about 74.50, and then you have this kind of midpoint here at 71.78. That's basically the next key level. So those are the two major targets up if price can establish acceptance above 69s. We've had a very bullish trend day morning so far, overnight and pre-market, and we're holding just above 69s right now. If there's any failure here, or a failure to really establish acceptance above 69, 69.50, that could lead to a failed new high and another major round of weakness, very similar to this leg or this leg. But if prices can hold above 69s and start to really see expansion and hold, then we start to move up. So basically we have enough compression here to spark the next major move. It doesn't look super bullish at this point the way it's attacking this level. It looks like you know, we need to see a little bit more acceptance, but again, this is the zone. You either see a continuation and a breakout and continuation, or you see a failure to break out, and then you see some stops get run. The stops will get run below 67.50. That's below these recent lows. So below 67.50 opens up major downside potential, perhaps as low as 64s. Above 69, 69.50 starts to open up 71.70, 71.80, and as high as 74.50. So that's the zone to watch early this week. We could see some significant release of energy out of this pattern here. So continue to watch this zone very closely. If we take a look at gold, we'll bring this out back to the daily chart. In gold, we saw a pretty strong little bottom here. And again, that was a strong bottom that fell just shy of our major 1200 support level. 1200 is the real level there to watch, and we came shy of it, getting as low as 1210.70, and then prices are bouncing. I mentioned to our trading room that 1220 to 1240 is the short-term buy zone, but if price cannot establish acceptance above 1240, we might get a double dip back into those recent lows and try 1200 evens. Remember, this has been a market that's been very, very bearish. Very bearish ever since it failed to get above 1370s, and the next major area of support is that 1200 level. It would take out recent lows. Right now we didn't quite do that, so we may see another round of weakness, but the short-term move is up to about 1240, and if we can't really see acceptance above that, you're going to see bears come in and look to defend that area for a shot at reaching 1200. So the long-term idea is to watch for 1200 to bounce it back toward 1287 and as high as 1300. Short-term bulls are trying to push for a push above that 1240. Bears inside this downtrending trigger zone are looking to push price into that 1200 level. So 1240 is the real pivot here. Failure to get above it leads to one more round of weakness. Above that level starts to open up a return back toward value. So keep an eye at that level in gold. That is it for now. We'll see how this plays out heading into the rest of the session. Looking forward to seeing you in the trading room here very soon. Good luck, trade well, and I'll talk to you soon.